Hello guys, glad to have you on board again today. We're going to try making a quick one on this time, and we'll start as usual with the Bitcoin. Having a look at the daily chart, it's not looking that pretty today, as we might have another down day. It's not that big of a deal actually, because we're going to try forecasting what the bullish potentials are, what the bearish potentials are, what the bullish elements are, what the bearish elements are, to kind of balance all that shit and see what the odds are. So first, in a technical perspective, because we're trading the context right now, we're in a daily chart, so you don't have to make that analysis very long and profound. Just having a look at the indicators, what they're telling you, and what the odds are in terms of forthcoming movements on that ongoing market. So first of all, we've had back then bearish double bearish signal out of a versus a weak bullish. The weak bullish led us right to the support. We even broke it down, but we failed at some point and we found some strength. We've been rebouncing, and now the bears are back at play with a bearish sine wave. But the thing is that if we have a look at the indicators themselves, what we have in here in terms of momentum and oscillator sine waves are not necessarily suggesting that jumping in right now to the bear side might be a rational choice to make. For a single reason. First, we're already way into the bearish oscillation. We're nearly reaching the end of the bearish oscillation as we're in a bullish reversal area in terms of sine wave, which means right now searching for bullish entries is more rational than searching for bearish entries. It's at least searching for bearish entries is absolutely out of context, as you cannot short when the oscillator is right here in terms of sine wave. So it's way too late to making short entry right now, otherwise than doing it in a breakout. And from what we can see right now, we've got nothing close to a breakout. What will be a breakout signal somehow? It would be the sine wave telling breakout, which is not right now. We're just in a bearish cycle. Which says the bullish potential is going to be limited, which is exactly what I've been forecasting back then. So for now, all I say is that we're still on track with the ongoing scenario. We'll have potential targets near those prices, but we cannot go further than that as we're in a bearish cycle, which means we're not going to target that high. It means the market will remain bearish, but just we might have an extended retracement out of this, as I think this cycle has been triggered a little bit too early. So I still see the price doing this. And we'll see next near the bearish target that we might have if we can find some more decent bearish entries. As for right now, if we have a look at the momentum isn't bearish. Yes, it has crossed below zero right now, but if you're having a look at the trade lines, and they're important when you try to assess the trends, look at this. We have a much longer bullish trade line than the bearish one, which means for now bulls have it under control, and we are nearly touching this after a pretty long bearish momentum oscillation. So anytime the momentum is going to reverse to bullish with a probably a bullish sine wave oscillation as well, we'll have the support of that bullish trade line, which means I think we'll have more than enough to break a resistance and probably break up that early bearish signal. But we have to bear this one in mind, as the fact that this one is now on the charts, we cannot be that bullish. Being the bullish end of the world, bullish optimism kind of bullish is not possible. It's just going to be the retracement kind of bullish to me for now, but I remain bullish anyway, because the scenario hasn't been invalidated yet. Now we're moving to the 2-hour chart time frame to make a closer analysis at the signals we might have. This is what we have. So first risk is the one we've been talking about, the risk of a mean reversal after a bullish breakouts. The bears took us over, might have took us over on a wrong footing kind of pattern, which we call the mean reversal. It means that the bears took over after a bullish breakout and they wrong foot the bulls. So this is option number one, and in that case we keep on falling back to the major support and we'll break it down. And as I said, if that's what to come, then I'll take a stop loss, no questions asked. That's part of the job. Then I've said something else, that I said that if we had to break down the week low, which we've done, this is the previous week's candle, we've broke it the low. we don't have to install many candles closes in here. I mean, we just made the first 2 hour candle close right now below the support, means the next one has to be bullish. As you can see, sine wave is triggering taking profit pattern, which means we're divergent out of a support area. So we can go slightly lower or eventually triggering even a morning star pattern, but we shouldn't stay here for long. I mean, that's my point. Right here is a support area. We should find some bulls in there and retrace ASAP. If we stay there for too long, that would be a bad thing. That means the price is accepted below the previous week's low, and that's not supposed to be the case in a bullish trend. So I think this can be just a trap, but in order to be just a trap, we must execute the volume in here pretty soon and take over back into the previous week's candle, and then we need to close at the high. I mean, we've been breaking previous week's low, which means we cannot close lower than 6,500 on Wednesday, on Sunday. So this is a minimum objective right now to get into closing Sunday. We have to restore 6,500 at least, and eventually being higher is necessary. The higher will be, the better it will be as well. So minimum 6,500, and until then I think there's nothing more to say than just waiting patiently, putting a black box. I mean, if you guys can't handle being patient, what you can do is basically doing this. I mean, you put a black box out of the lowest candle closes we've been making, despite this, that is just panicking market, and this is where we managed to install closes the lowest closes. So from what I can see, what the hell is going on with that target? Okay, so from what you can see, we've got this. Okay, this is the resistance, and I said as long as we don't break up 6,000, let's say 600 to get some room in here, this is the point we've been just falling apart. Just consider this as a black box. You don't have a damn look at what's happening inside that. Okay, price is inside there, you just don't worry. It's either it's going to break down, and then you have to trigger stop losses if you're a bull. It can make lower shadows in there, but no more than that. You don't want to see a single candle closes in below that price, or problems are ahead. Second option, we get to retrace up here, things are okay. If we make candle closes like there above those prices again, I mean, in that case, we'll go straight forward to the targets, and I think we'll get eventually slightly higher, but probably 7,800 as a target. Okay, to take gains, we would have been really patient. That trade would have been taking 3 weeks to give us the damn target, but in the end, taking a loss for a market that could give you the target will be the worst choice ever. So right now, scenario is not invalidated, it just requires patience and risk adjustment. That's what we've been saying 2 days ago when I made this special video right for it. You need to reduce the leverage accordingly, as all the reinforcements you may have taken on the road, on the way, has to be taken down. We're back into speculation right now, which means speculative leverage is absolutely necessary. Despite that, there's no more to say. It's same thing for all the cryptocurrencies. They're trying to fall apart today. Once again, it's blood in the crypto market, but that's no more than that. I mean, if we manage to find a support today that will break a daily high tomorrow, then I think we're good to terminate with a pretty nice end of week. And if we do it, next week will be bullish as well. So it's not the worst case scenario. It's just that if you are panicking anytime we get a downside when you buy, then you're not going to be a good trader. And that's the same thing on the opposite. If you're just getting euphoric, if you are panicking anytime the market is retracing when you're selling, then that's the same thing. Panic's not good, euphoria either. You just don't get into those emotions. Anyway, moving on from the cryptocurrency markets, still trying to figure out what the hell's going on with Wall Street. The Wall Street guys are still trying to sell us their shit at very expensive prices, and we just don't buy it. So we'll see how this plays out. I mean, now we're getting dangerous areas in the Bitcoin, so we'll have it live. So let me just pause the video a little bit. I'm gonna just delete that. Okay, damn it, now we see things are playing. Things are at play. We're at the big level, and we'll see how this plays out. I mean, right now it's not necessarily needing to panic. We've got 2 hours to go into that candle, but that candle must not close below that price. Cannot go there. Where is this 6,000? We can go 6,000. If the candle is closing there, it's end of the scenario. Let's set things straight. Now we're oversold. We're on a taking profit pattern. I want to see the damn bullish guys playing their game out here. We've got very interesting price. I cannot buy eyes closed, so I'll wait to set things straight. I'm not going to buy right now. I'm just going to wait. I've been playing my aggressive shots, which means right here I'm just waiting and seeing what the guys are doing, and if they're doing it well, then I'll take a reinforcement. But right now I need to remain low leverage to don't take a big loss if for some reasons the trade were to be invalidated, which is so far it isn't. I mean, so far we've got nothing suggesting it is. We're working support area, momentum is divergent, so if we can keep on the price right here and rapidly reversing, then we're good. All right, moving on. So back to US indexes. So what we're having right now is pretty uninteresting, not to say that. So it's just basically waiting right now to see how things will play out. We've got the bulls trying to push us higher as hard as they can. We've got the NASDAQ, in which I have a new scenario that I'm going to share with you guys. Actually, right here in Wall Street, I think things are not doing that well with the NASDAQ. We're going to do it in a weekly chart time frame, so you'll be able to see, to zoom out and see things clearly on that asset. So we're going to remove everything we have on the chart right here. From what you can see, this asset's not performing pretty well. Everyone thinks this is just bullish and okay, we can just keep on going forever. When you see this, it's generally not a good sign, because if we just zoom out, let's say for example we look at a 3 months time frame. Clearly this is bubble trading. So two options: we keep on going to the bubble, or a second option, we already found volatility burst before the market reversal. Have a look at this. Momentum is now bearish. We are failing to make new highs. We've been making new lows, which means momentum is bearish. So anytime this thing reverses, it's not going to be pretty as well. And you know about that. I think sine wave's just waiting for a bearish candle to confirm, as we've been terminating the bullish oscillation. We're into the bullish final thing, which means we've got exit back then, we created a mean trend, and now right here we've just making the final waves of that trend. So in a weekly perspective, anytime sine wave reverses to bearish, and I think it's pretty close to do it, it just requires a market bearish engulfing. So anytime we make a bearish engulfing on a weekly chart, I think the NASDAQ is going to trigger a weekly bearish signal, which will be the end of the market cycle. Because just to say things straight, what we're doing right now, end of wave 1, end of wave 3, we're going to have end of wave 5 out of a pretty nice bubble kind of trading, which means we're going to fall apart in the tech sector. So I'm basically still waiting. I know, you know guys, I'm bearish on the US equities, but I mean right now we've got everything we need to set this in motion. It just requires a little bit more patience, because in terms of timing we could still try to go slightly higher. But if Wall Street wants to make a bubble, let's set things straight. This is how they do it. They will do it that way. They will try to install that trend line in here. If we go there once again, I'm no good. Okay, I want us to fail in here, not there. If we go there once again, we might have a pullback, but I think Wall Street is going to try to trigger some crazy thing ahead. I mean, it will be just the tech market going into irrational territory. So it will be bubble trading. So option number one, we go just right here once again, pull backing a bit, and then we create something just like that. Or I don't know why. That will be pure imagination. It will be just, let's say how high we can go before just fucking it up entirely. Okay, and the next level will probably be there, which means 8,200. We could do this in just a couple weeks. I mean, if the market is just looking for sellers, then we'll go as high as possible until we find them. And when we find them, there will be just sellers in the market, and afterwards things will not be pretty. So waiting right now, we've got those two options. It's either Wall Street will be able to put out that big bubble kind of trade, and that will mean that the equities, the tech sector is going to take another 15% upward. It's still possible. As I said, everything's possible. It's chaos theory out there. The fact is that if we fail in here, and if that's the volatility burst before the market crash, then we're not good. And it's not going to be good. It means that if this is the vertical terminal part of the bubble, then the crash is about to come. And that means we're going to get the opposite, not a 15% move, but a 30% drop. And if that's what's to come with the tech sector, then it's not going to be good. Not necessarily a 30% drop, but I think at least we're going to break down that support and probably that one as well. Getting there, which makes minus 25% on the tech sector. So nothing close to bear market, just at the limit of a bear market. So just enough to make everyone panic, but not enough to just actually get into bear market. So just forecast that we could just do this. I mean, you take this and we'll probably head toward 61% retracement. So yes, this is where we are. This is where we currently are. If we just go there, that would just mean we're tracing 61% of the movement we've been targeting, triggering, well, out of Donald Trump's election. So just once again, everyone thinks I'm just a perma bearish guy who just want to sell equities forever. Not the case. Just I'm so exhausted trying to explain that to people. So okay, those who think I'm a perma bearish, just take it that way. I just don't give a shit. It's just that right now is the timing to find for selling entries, and it's two options. Either we'll have no sellers in here and gonna find them into a crazy nasty bubble trading. Option number two, we find them, or we already found them and we're about to nasty reverse. And if that's the case, all the bulls will be wrong-footed, because that's how it is. I mean, in a bubble, all the bulls are wrong-footed in the end. That's what triggers the end of the bubble, when all the bulls are suddenly wrong-footed and just all the stop losses are triggered at once. And that's the scenario I'd like to see triggering. And just to set things straight, once again, if you're having a look at independent stocks that leads that market to the upside. We've got Tesla. It's not doing well right now. It's having nothing more to perform, not to say that we might have found another market top that could lead us to 25 more downside percents. We got Apple. I mean, look at this. This thing is just the biggest trap ever. We've tried a bullish breakout, and I think at any time we're going to reverse that. We've got a bearish momentum on a bullish breakout. When you have this, it's generally what we call the range breakout. So this is range breakout, and this is going to be the mid part of a range. So consider this as being the mid part of a range. If I just respect the strategy, this is what we'll have. I'm just taking the neutral area. Consider this as the mid boundary of a range. And then this is what the range will look like. And guess what? It leaves us back to the previous bullish gap. This is my target. And once again, it just requires one single thing, the sparkle that will trigger the fire. Anytime we get this, everyone's going to switch bearish. All the stop losses will be triggered at once. It's just a switching kind of scenario. It's either we don't find that switch and we're going to get into crazy bubble trading, or we do find that switch, all the stop losses will be triggered at once, all the bullish sentiment is going to brutally reverse, and then we're going to get the dead cat bounce. Remember that this is not end of the world. The first shot is just there to fuck up with the bulls' minds. Just let them know that the game is over and that it's no longer time to buy for crazy highs. It's just return to reality. The first drop is brutal. It just messes with psychology. And then we've got what we call the dead cat bounce, which means the market is going to rebound out of it. Doesn't mean that we're going to end of the world kind of trades, that we go into the big short kind of trades. Nothing close to that. It's just that we are going to unwind the potential bubbles we have, and we generally do that brutally with a trigger. We just need to find out that trigger, and I think it's about to come. I just don't know what this is. Might be the trade war, or might just be something that we haven't even think about. So don't try to anticipate what will lead that market into blood. Just see the pre-signals. Lots of equities are no longer performing. The money is concentrating into bubbles, tech bubble, real estate bubble. We've got lots of bubbles, and at some point they're all going to burst one by one. So just be aware that it's not just because I want to see the market going down. I don't give a shit. If the market goes up or down, I'll make money anyway. It's just that I think we have too much risks to go to the downside to consider making any kind of bullish entry. That's just a bias. I need to pick a side, and I've been taking the bearish side. That doesn't mean that I want to see the market going down. I would like to see it going to the upside. That would mean the economy is performing well, and that would be better than seeing a recession along the way. But just to set things straight, after 8 years of growth, generally we have recessions coming along the way, and it's just like people just don't want to see that happening. It's just like a guy at a party who's been drinking too much and doesn't want to go home. I mean, at some point, you just get the guy a cab and you put it back home. And that's how I think the market is about to do. It's just say, okay, now party's over. Just get back home and try not to get a headache tomorrow. That's what I think. I mean, that's the behavior I think the market is going to face in a few hours. Not a few hours. No, I'm nothing close to predict timing, just to set things straight. I don't really know how and when this will happen. I just think that this is the most probable thing to come. Market brutally reversing and figuring out that this was actually just a dream, and that the reality is going to be brutal at some point. Okay? So don't think the big short is right now. It's not going to be the case. Even if we go down, we'll have the dead cat bounce right after. Okay, so if we go there will be probably at least 61%, and generally the dead cat bounce is 76.4% retracement. So this is where the big short will be on the US indexes. Okay, so first we unwind the bubbles, we burst the bubbles, which means all the areas in which the money have been concentrating will be the big losers. So Apple definitely going to be in there, Netflix, Nvidia, all those shitty assets, crazy overpriced, Amazon, Boeing, Facebook, Google, all of this, Tesla, all of this will basically fall apart because the bubble will burst. And when the bubble bursts, everyone is being stop triggered at the same time. That's how it is, and I think that's how it's about to be. Now, that being said, we're not going to last long. This is something you already know, but as usual, anytime I get to speak about, to talk about SPX or US equities, I need to warn you, just because when I just explain the scenario, you might be thinking that this is the end of the world kind of trade, as it's absolutely not. There's no hurry. All I want is to catch up the moment where the psychology is going to reverse, because you cannot trade with breakout in there. It's just when the market is, when the movement is going, when the switch is going to be making, it will be too late. So it's something that you need to anticipate if you want to get that money. And while it's ongoing, you cannot jump in because it's going too fast, and you cannot. That will be too risky to take trades in there. So it's anticipating, waiting for this to happen, and when it happens, you can get into reinforcement without taking, without piling up the risks. Okay, that's how it is, and that's how you trade bubble. But just to set things straight one last time, I know I'm setting a lot of things straight. I might be considering stopping using that word. But anyway, only speculators can take bubble bursts. Okay, so I might be the only person right now telling you to sell. Everybody's probably telling you you should just buy and don't overthink things and just let the trend play. And everyone is going to think I'm a god if the market is reversing, because I might be probably just one out of 2 to 3 guys out of hundreds of thousands telling that you should just don't worry and buy. And I'll be there to tell you maybe you should think twice before pressing the buy button, because what's about to come might not be pretty, and you You might just be wrong-footed in a couple of days. I mean, you can just go to sleep, wake up the next morning, and the newspaper will sell, okay, Wall Street's bleeding, it's not going to be pretty today, and you won't be able to exit your trades. And I just don't want you to get in that position, because you don't know what this is. I know what this is, and I know you don't want to be in there. So I'm just warning you not just to just don't buy. I mean, I don't invite you to sell. Only experienced speculators should sell. But buying is really out of context. If you're buying right now, it's just you're probably buying the highs. And whoever the fuck wants to buy the market top. So just think straight. What are the risks? They are way too enormous to consider buying that market. So if you don't know what to do, at best, just stay away. If you want to speculate, take some short speculative trades, but be aware that speculation, once again, cannot be done with leverage. You just speculate with low leverage, and whenever that triggers, you get into reinforcing the positions, but not before. Now moving on. Of course, I've got something else I'd like to show you. I mean, this is something that Wall Street should be bleeding the hell out of. In a weekly chart perspective, we've been making what is probably an evening star pattern with bearish momentum, bearish divergence out of a very big resistance. I would have liked to see the oil taking the price I wanted to sell. So I missed that shot, and I'm so ashamed of this, because I think now it's too late. I mean, this is no way forward. I mean, this is clearly the market made the first bearish impulse. So I think US oil is reversing. And if US oil is reversing, how the hell do you think we're going to get growth into US equities? What we've seen yesterday is what I think is the switch. Now US oil is about to go bearish. And if that's the case, US will follow. I really think it that way. So we might have a pullback in the next following days, but this is all we could get. I mean, I'm ready to get into US oil anytime soon. It's just waiting to get this ready to perform, but I think we're more than enough ready to get in, and we might be just ready to get some pullback, finding bears, and then this will be, I think, the bearish reversal leading to breaking down that support. So I think the objective right now will be probably wave 1, pullbacking wave 2, big wave 3, 4, 5, and we'll have breaking down that support. Okay? So we've been terminating ABC correction, and we're gonna get we're gonna get ABC bearish as well. So which means 5 bearish impulses, same size as this, tinier size, slightly tinier size. If you're having a look at the weekly chart, what I think we're about to do is just reversing to 61% again. So I think we find the market top right now. So now we can clearly forecast the target. I think the target of that scenario is reaching there, $45 per barrel, which means very low price. And that means that we could have some signs of recession along the way and things deteriorating. Of course, some sectors are going to outperform regarding the lower pricing in oils, but I think this is dangerous. Okay, this is something that you cannot avoid. When the oil is making a 5% move in a single day, when equities are just doing nothing, something is abnormal. But abnormal things doesn't last long. I've told you about that. Price distortion is something that can last a bit, but but at some point we reached out the tipping point in which we cannot go further enough, and the market is generally brutally reversing and wrong-footing those who've been trying to keep that trade ongoing. Okay, so the worst thing you could do when you see a price manipulation is to keep on going with that manipulation too long. When the tipping point has been reached out to, you don't follow the manipulation, you fight it. And this is what I'm doing right now. I think the manipulation of Wall Street's I've been doing long enough. They are too risky right now, and I think that if this is not right now or in the next following days or weeks, I think that we'll just be out of sellers, and the risk is going to be in a vertical bubble trading mode that I don't want to trade either. Okay, so this is just it. Now I'm moving on. It's been half an hour just talking about that. So the forex market is going to be impacted some way with that. The question is, and I'm trying to figure it out, what the dollar is about to do with it. So it's either dollar is rangy. It's possible. It's option number one. Okay. So either the dollar is bullish, and that's what I think is would be the scenario in which we'll get to create the bubble. I mean, this is the scenario of the bubble. The bullish dollar is the safe area, which means that all equities are consolidating or getting into bear market when Wall Street's holding on and creating a bubble, concentrating all those dollars into the same bubble areas, the tech sector, the real estate, and we get to pushing those bubbles to crazy high valuation into before flushing that out. And the dollar will just collapse right after this. This is option number one. Option number two, this is not just 1, 2, 3 sector, and that's something really different, which is just an ABC. And at that point, the dollar will be rangy, and we'll have made A, B. You can see A, B triangle, C wave, and what the hell? If we terminated this, that means that right here we've made a market top, and right here we're bearish, and we're just making another ABC, which means we would have made A wave, B point, C point to come, and terminate. Okay, and in that case, the dollar will be there where everyone thinks it's going to be there. Let's set things straight. Right now, every analyst in Wall Street, at least the consensus, is like 90% thinking that we'll go there, probably 5 to 10% thinking that we'll go there. I'm among the 5%, and we'll see who's right and who's wrong in the end, but I think I might be right. So the dollar is the big guy right now, and as you can see, if the US oil is falling apart, at some point the dollar will fall as well with it. So we'll see about that, but right now I see clearly bearish signals. There are still some rooms for the momentum to go slightly higher with the dollar, so I wouldn't necessarily be that aggressive right now. But we could very well end up being bearish right here. That wouldn't be a problem to me. We've already made the bearish reversal candles. So until we manage to revalidate this to go higher, so until we manage in a weekly perspective to break up that high, all I see is just a bearish market. We've been breaking the low. We're just pullbacking, which means that what we have right here in the dollar might just be a pullback to sell. Okay, I got nothing suggesting you can sell right now. So it's not possible to take a short entry right here, right now, because you just, yes, actually, you've got the signal, but we're not in the technical cluster. I think the technical cluster is slightly higher. There's no resistance in here. So I would suggest waiting for the dollar to go slightly higher with today's catalyst and eventually forecasting this to be later on. So if, for example, we just use Fibonacci forecasting, this is what we'll have, and that will mean the 61% is slightly higher. It means we could still be into the dump zone. So basically be waiting right now to see price eventually testing some slightly higher prices. But let's set things straight. We already have the bearish triangle out of a bearish sine wave on a bearish momentum. So normally anything right now should be taken as a bearish entry. But I will just suggest to keep a stop loss right here. Okay, so that would be bearish trading right now, but with a stop loss right here. And those who want to have better risk-reward ratio, I would suggest to wait for 61% retracement or eventually that little tiny resistance in here. We're going to use this fixed range tool. So we're going to take all the way down here to here, and we're going to see where we've put it the most volume. Oh, damn it, we don't have volume on the XY, sorry. Yes. So it's not possible right now, but I think we could just go slightly higher. We clearly see that we have a tiny resistance in here. We're going to zoom a bit. Zooming in a bit to get better resolution. So this is where we got first resistance. and I think second one is in here. Both have been untested to the downside, so these are really highly probable resistance level we could reach out to. So I suggest that yes, putting a stop loss in here is definitely a minimum to get into actual trading, because we've got those two resistances that the market could try to reach out to without a problem. If we look at the structure, we have an A, B, C right here. Okay, so it's A, B, and we've got C wave, suggesting that this is the price I think Wall Street might be triggering. So definitely confirming that the stop loss needs to be set right there. So now the choice is yours. Either you wait for the dollar to slightly get into performing in the next following days to reach out to the higher resistances we've got there, or you think that this is already more than enough and that's ready to go. I don't think that this is the case, so to be honest, I'll be a little bit more into waiting rather than jumping in without clues right now. I think the bulls are still pretty much optimistic at that point, so I think they can still try to push the dollar a few the DXY a little bit higher before getting into a nice bearish trade entry. Okay, so patience, low leverage. This is high speculative trade, but I think selling the dollar and selling the equities as well will be interesting at some point. But not right now. Okay, so it's waiting to get the perfect tipping point. Today we've got market catalysts, we've got the minutes, the ECB minutes and CPI, and I think the CPI might be the game changer today. So we'll see about that. It's way too early to consider anything of that done because we don't have the number and we don't know how the market is about to react. So consider that today is going to be a big day. Tomorrow will be the confirmation. If you're having a look at this, gold is trying to find a bottom, silver as well on a double bottom structure. If that's what to come, not pretty. Again, it means that the metals will be eventually performing. The precious metal, not the metals. I mean, the copper has been falling apart. But if silver and gold are holding against it, that means somehow we have a risk appetite. We have a risk sentiment. And now I want to see that risk showing up into the equities at some points. And I'd like to see the gold just exploding as the dollar may collapse with the US equities. Because if we have bearish dollar, wrong footing all those who are buying the dollar, and if we have bearish equities with all those guys who are buying equities, then everyone's going to be wrong-footed, and guess where the money will go? In the gold. For sure, you can be sure that the gold is going to be the big winner in that game if for some reasons the risks had to be pulling up pretty brutally and just wrong-footing all those who've been trading against that. I mean, in that case, gold will be bullish and it will probably don't stop. You can expect something like that just ongoing for longer than we had back then. Okay, so I know I'm trading against the consensus. I'm totally aware of this. This is not that I like to trade against the consensus. I mean, it's just that right now everything suggests that the consensus is wrong and the people are just trading because others are doing it that way. And at some point, I mean, the reality is going to come up and tell you, okay, guys, you might have been a little bit too far. It's time to go home. So think of it that way. It's just the annoying kind of guys at the end of a party who just doesn't want to go home. They just think the party is going to go on forever. They've just been taking too much drugs, and at some point, you gotta go to sleep. So I'd like to take those guys' money because I think they're just not trading right now. Because following the trend is good when you have a trend, and moreover when that trend is followed by macroeconomics. But I think right now we're not even followed by macroeconomics, but moreover we've been creating price distortions with that crazy kind of trend trading that we've had the last couple months. Not to say the thing started to go crazy at the end of last year. I mean, when we created that rally that we've kept on pushing at the early stages of that year, it was clearly nonsense. And at that point, at some point, we'll have to pay for those divergences. And it could be the case in a few weeks, or it could eventually take months to get there if we get to create a bubble. So I'm gonna stop here. I'm turning around in here and saying things and saying things again. So I'm gonna stop here. Wish you guys a good trade. I might not be able to make a video tomorrow. So if I'm not, I just wish you a great weekend. I'll be off next week. So of course I'll be watching for the markets. And putting alerts, and if things were to trigger to the downside for some reasons, actually I wouldn't necessarily be surprised, to be honest. It's happened to me so many times in the past that I'm working my ass off a scenario for weeks, not to say months. I've been working for sales for months in the US equities, and I'm pretty sure it's going to trigger just right when I'll be in vacations. I'm not sure, because I don't know, you know, it's chaos theory out there, but I kind of feel it that next week the market may collapse just when I won't be there to see it right in front of my computer. So that wouldn't be bad in the end, because I have the trades ongoing. It's just that I would be just so amazed to see that the market would have fucked up with me for a month. Like testing my nerves and testing my resilience, just to let it go when I'll be off the market. So I won't be off, but I won't be in front of my computers to take reinforcements and things like that, which means I might not be able to react right in time. So I'll try doing my best to cover up this with the laptop and eventually recording video through the laptop. If things are getting dirty and pretty fast, it can also be just doing nothing next week, and that will be great. I actually hope nothing happens next week, but that's how it is. And we're going to terminate on this. That's the final argument. So you can see we've got this. And this is not normal. From what we have right now, we've been creating price distortions. This is the market top we've been creating in January. And since then, as you can see, we've made the market top, and then the market just decorrelated. We've got kind of those who remained bearish, and those I think are normally priced, which are the Euro indexes and the Dow Jones, as the Dow Jones have been suffering lately. I think these are the ones that have been pricing normally. And then you've got those who aren't. You've got the FTSE, you've got the NASDAQ, and you've got Shanghai and Hang Seng. Those have been oversold, but I've been forecasting this. These have been overbought, and for no reasons. I mean, this one is even positive. We're 3% up from the January market top on the tech sector. So as I said, either we're going to extend those spreads, which means that Shanghai and China is going to get into actual real crazy bear market, crashing markets, or I think that's the opposite. I mean, Wall Street's going to surrender the gains, and China might be returning to the mean. I mean, China will get there. Eurozone will be falling a little bit more, maybe losing 4 to 5%, no more than that. I don't see end of the world kind of scenario in the Eurozone, just getting to lose at least 4 to 5% and having all those equities to the upside, getting in. I think everyone should, in the end, get there. Minus 10%, then we buy, okay? I think this is where we're heading. All the guys should go there, which means for the NASDAQ, minus 12% straight line. For the SPX, minus 7% straight line. And that's the minimum. Because as I said, regarding Wall Street, if for some reasons we were to wrong foot the bulls, we could go more than that and just not and extending ahead and extending further than minus 7%. But I think that's just the minimum. So we'll see how this plays out. What will be the trigger that could play that switch on the psychology in the U.S. investors? And if that switch is strong enough, I think we can get to double that down, which means 7% extended to another 7%, which leads us to the minus 15% I was expecting for a month. Anyway, goodbye, guys. Eventually a good weekend, and we'll see each other eventually tomorrow or next week if things happen in between.